Hi everyone, welcome to a snack-sized, an appetizer-sized edition of Your Money Radio. Danny Stewart, Don Vanderboard, Hunter Mazingo here with you the day before Thanksgiving, taking you through Thanksgiving, through the holiday weekend. So when you get bored of turkey, you get tired of football. Look, and I'm tired of football, Hunter. I'm not going to lie to you. We lost to the Browns. We're not a good team. I'm just wore out from football right now.
Yeah, it looks like you're going to be a value investor on the Carson Wentz cards because
I
I
am
don't think.
and value investing is so like we're going under. The whole Carson Wentz card market is collapsing. I feel like the Hunt brothers, with the silver market, man.
Shit, my team got delisted.
Are you on the OTCs?
Pink sheets.
Jags? I don't understand why the Jags are bad. Like, are they? Is it just,
tanking for Trevor?
Well, and very poor drafting over that. I mean, I like some of the players they've gotten.
Only over the last decade. I mean, what's the big deal? We have like 0 first-round picks on our team except for the most recent and the one before draft.
Yeah, and the ones that were good have all been traded away. So, I don't know.
Or released and play key roles with other teams like Tyson Alualu.
There was
not good enough for the Jags. Good enough to start on the defensive line in the undefeated Steelers.
Do you guys have Calais Campbell too with that deep lad?
We traded him to Baltimore last year.
Oh, he's doing great things there, right?
As part of the house cleaning. He was until he got hurt.
Yeah, they apparently they missed him pretty bad this past week.
Well, as we are giving.
Did you see the stock nerd comments from Mark? He emailed us about the Jets having a trump card, Adam Gase.
Yeah, that's
Adam
true.
Gase needs to be fired.
No, they're keeping him so they get Trevor Lawrence.
Man is 0-9.
Anyway.
So as we give thanks for everything in the NFL, which is really just an airing of grievances, wishing you stock nerds and market lovers the happiest, safest, and healthiest of Thanksgivings and holiday season coming up. We wanted to do a quick podcast, got a lot of things to talk about. But one, it's going to be Black Friday, although it's felt like Black Friday the entire month of November. The greatest gift I think you can give a coffee lover this season is the subscription to coffee from Panera Bread. So I bought this back in, I didn't get it. They gave me like 3 months free. Hunter, you're drinking coffee right now, right?
I am.
What does your cup say? I wanted to ask you.
I am.
Oh, you drink? Yeah.
This says, this is my dad's cup, Hunt Fish Connect. I'm in Alabama, so it's pretty par for the course here.
Okay. And so.
All right, Hunter.
Yeah.
All right.
Roll Tide.
So for like $8.99 a month, you can get unlimited coffee all day, every day. Now, they say you got to let an hour slide between when you order a coffee to get another coffee. Easy peasy for me. So look, you go through the drive-through. These little guys here are like $3 a piece. I've been averaging like one a day. And so since June, when they first sent me the offer. So I don't know how many of these, whatever I've spent on this coffee subscription, I have gotten paid back in spades.
They're losing money on you. They're losing money on you.
Oh, and they always ask, hey, would you like something else? And the answer is hell no. I gave up sugar and carbs, so I don't want anything else. I just want coffee, inject it right into my veins, as a matter of fact. And so $8.99, best Christmas. If you gave somebody a coffee subscription for unlimited, if they're near a Panera, see, the thing is, Danny, they built a Panera Bread right by my house on the way to take the kids to school in the morning. So makes it super duper easy, to the point now where Remy wants to know, hey, are we stopping for coffee? So
so it's $8.95 and that's annual. That's for a year.
No, monthly. $8.95 monthly, and it's
still not bad though. I mean, I probably spend about that month. Or about
moving along.
Oh, I'm sorry, Don. No one has offered an energy drink subscription where you.
That's why I'm pissed.
Yeah, where you can get wings. That's Red Bull, right? You drink the Red Bull.
No, he's a rock star. Yeah, Rockstar Zero.
Rockstar Zero.
No sugar.
No azucar.
So it's healthy.
So,
Yeah.
so we've already introduced Mark from Buffalo. We've got characters on the show. Mark from Buffalo, Kansas City Jeff, who loves the Kansas City Chiefs, and we've got Uncle Tony. So
Buffalo Mark, Buffalo.
Mark from Buffalo.
I like Buffalo Bill, Buffalo Mark.
Well, Mark from Buffalo. All right, Dan, whatever you say.
That's where you're going to hang the show up at. Hey, I demand that we call him Buffalo Mark. Fine, Danny. Put your foot in the.
Just correct us every time, Dan.
I love
every time we say it.
So getting away from Mark from Buffalo and going
Longhorn Dan.
What does the horn sound like on Longhorn Dan's car, Don?
Definitely.
Oh, you think it's? Yeah. What does it sound like, Danny? Or when you
Well,
roll
my
up in the
dad
Cadillac?
actually, as a joke, put a little siren, like a police car siren on his car. A special thing he can push.
Some great sound effects here.
Yeah, we're stellar start to the show here. So Uncle Tony, who is a great human being, that is not me being facetious. Uncle Tony is a humanitarian and loves the military, especially Marine Corps, Southern California. I did something last night on Tesla, and you can see Tesla. Let me just pull up the bigger chart of Tesla, what it's doing right now. So Tesla is just literally off the rails here as I zoom in. Up another 1.5% today, and it just chugging forward. But something happened a couple days ago, and so I've been in Tesla for a while. I talked about all this in the video last night, and I was charting it off of a 15-minute close, and you can see here's Monday. So Monday you have a gap up, and then it's not giving up the gap. And when you get these types of consolidations on gap up days, and they close on a 15-minute basis and a 15-minute consolidation, what you're looking for is the gap play the next day, a gap higher. And so as long as the market cooperates, the market cooperated, and Tesla has made this tremendous move. But it was on Monday night that I noted that Tesla, let me get you fellas back up here. Tesla went what's known as on TD Ameritrade's platforms, hard to borrow, HTB. And so Uncle Tony is a student of the game, and he watches the videos every night. And Uncle Tony texts me and goes, "Hey, Tesla isn't hard to borrow on Schwab." And my first thought was, but Schwab and TD are the same company right now, but they're still operating as separate entities. And so Uncle Tony wanted me to know that. And so I don't really understand it because I didn't kind of talk to him about it. I should have just called him. And so you can understand what hard to borrow means. Hard to borrow, you can read all this. You can pause the video here and read all this about what hard to borrow infers and how brokerages charge for that. But hard to borrow for me is an indication that a stock is about if it has this setup, okay, and it's bullish, and Tesla's chart was bullish on the bigger time frames, you're about to have yourself a good old-fashioned short squeeze. And so now, because it's hard to borrow at one place and not hard to borrow at another place, I don't know the inference of that. I don't want to pretend I know the inference for that. I know that overnight Tesla, like I was literally, the Remster, I texted the fellas, the Remster was in the tub. I was scanning through some stock charts while he was getting his Mr. Bubble on. And I noticed, I'll show you, I noticed, let's get Tesla up here, that Tesla went right here, it'll say, hold on a second. It went from ETB, like literally what I was watching it, ETB to this, HTB. And I don't know what that would indicate. Like you can theorize what a hard to borrow, what a switch from ETB to HTB is. And it's almost, Danny, I'm wondering, did Ameritrade understand what was about to happen? And they're like, we're not letting you short any more shares. Because that's a protection. Like when you can't, it's hard to short Tesla, and it almost protects the people from themselves in that regard. It's not that you can't short Tesla, or you couldn't buy, you could buy all the puts you want. in Tesla, but they're just not letting you short the shares. And the reason why this is a big deal, to me anyway, is that Tesla dumped a ton of stock into the marketplace after the 5-for-1 split. And there was a glut of stock. You could have shorted the hell out of Tesla. Easy to borrow, easy to borrow, easy to borrow. But now it seems like the marketplace has absorbed that supply. The stock becomes hard to borrow. And it almost, Danny, becomes that supply and demand thing that Don, you, Hunter now, we all talk about, where eventually there's not enough supply to eat demand of a stock, like tight trading ranges, and you get that move higher. But in this case, I wonder if Ameritrade had almost had a heads up as to what was coming down the pike. And I'm curious as your thoughts, and if Don has any thoughts on that too.
Don, you want to go first? You want me to take a swing at it?
I don't. What do you mean thoughts as to what was coming down the pike?
Yeah, like when you get a switch from easy to borrow to hard to borrow. I've never seen that happen in real time. I've seen bullish stock setups hard to borrow, and they just squeeze the hell out of their shorts. It's a trigger almost. But
well, I don't think that they make a proactive decision. I think it means that the shares that they own, the people who own them say, no, I don't want to lend them out.
Okay, supply drying up to buy then, from based on what you just said there.
Right, but I guess my point is I don't think that they said, hey, let's just make Tesla hard to borrow. I think it's,
all right.
But I mean that's my theory. I don't.
Okay.
The other thing they can be doing is because they make money when they lend out shares, they charge you margin interest, right. And they'll even so they may have some in-house they're able to do with clients that have margin, but they may actually that's maybe, I'm not sure, but maybe a way to solicit people that have Tesla shares that are probably going to hold anyway. They're letting them know, hey, we'll pay you a little bit of interest if you let us borrow these shares and let people borrow them. If you've got a decent sized account at these brokerage firms and you set it up right and you're willing to hold these stocks for a while because you were going to anyway, you can lend them to the brokerage firm and they will pay you interest for that, and then they'll go out and lend it to people that want to short the stock at a higher interest rate. But stocks that are in shorter supply, that raises the demand for borrowing, and so people can make a little more interest to people that are willing to lend them out. So they may be soliciting, shares.
and when they charge those, and those interest rates, Danny, can get exorbitant. For people who actually are so desperate to short those shares for some reason, that the move that the stock has to have is so great to the downside to just pay for the cost to carry. It's absolutely crazy. All the years trading, I've never seen that switch in real time.
Yeah, when you short a stock, you not only have to have the stock go down to make money, yep. You've got to have the stock go down more than the margin interest you're paying to make money.
Yeah, and so Uncle Tony sent a list over of stocks that are hard to borrow and stocks that are easy to borrow this morning on the text machine. And just because the stock's hard to borrow, it doesn't mean it's gonna squeeze. But I've got a setup. It was just an icing on the cake that now it's hard to borrow. It means that, to me, it's an indication that there's more people getting short the stock, and they can charge those exorbitant fees to lend it out.
Is everything that's not hard to borrow easy to borrow, or is there another designation?
Let's take a look. Again, we'll just do. Give me a stock, Don. Any stock.
Pins.
Great. Oh, I'm on the wrong trade grid. Pins.
Hard to borrow. Oh no, that's Tesla still.
Yeah, I'm sorry. Yeah, easy to borrow. Amazon. Hold on, it's going slow. Easy to borrow. Netflix. Easy to borrow. So I guess it's absolutely, it looks like it's one of the two designations. I only know when they're hard to borrow because I'm looking at it, but I don't, other than that.
What's the short interest on Tesla right now?
That it's not that high. It's not as high. If you go to I'll show you. If you go to FinViz, I'll show you. And I don't know when FinViz updates. If it's once a month, then it's old news. So we'll look at Tesla here. It's a great, what did I just do there? It's a great question you asked, Daniel. So here's Tesla. Oh, did I do it again? Son of a, sorry, I'm bad clicker today. Short float. Don, what are you showing on MarketSmith?
6.3%.
Okay, yeah, that matches up.
Which is not much.
No,
That's not bad, yeah.
Not at all, not at all. And that's why I wonder when does, because I went to FinViz right away after I noticed it went hard to borrow. And then like, look at CVNA. So CVNA, Don, what are you showing for the short float on CVNA? I got 29%.
Let's see. I got to do a calculation. 19 divided by 66.3. 28.7.
Close enough, yeah. So that
big difference between the two of them.
Huge difference. And so I don't quite know. By the way, this is Don's. This showed up on Don's Twitter feed. I'm sorry, Don.
Oh, there he is, the perma short.
That's Northman Trader.
Yeah. Oh, he's got to be getting crucified.
I don't know who this guy, Hunter, great handle, by the way, Hunter SPX Thompson.
His name is Sven Heinrich. And
I think I follow him actually.
I'm blocked. He's as bearish as the day is long.
Oh yeah, he is. Everything's bearish.
The perma bear, Sven.
You're blocked because you asked him what his how he was doing this year or something. Don,
probably. I mean, I just can't help myself when people are perma anything.
You think it'd be tiring and negative all the time?
That's how he gets. That's how he gets on these shows. That's his shtick.
Hey,
I am Sven the Perma Bear. Have me on CNBC.
But by the way, that's a great point. That's why a lot of these people that get on these shows, these financial media shows, they've got to be all in or all out. They've got to have, and that's a marketing gimmick. These financial media shows have to either get you completely exuberant and a jubilant, or the sky is falling. It can't be even keel. It can't be consistent.
Like
because they can't get you to take any action.
Did you say jubilant? Did you say jubilant? Jubilant. Okay.
Exuberant and jubilant.
I heard jubilant. Like
I heard jubilant too.
Yeah,
Did I pull a Tim? Did I pull a Tim?
I think you combined ebullient and jubilant
from your own shortcomings there, but that's all right. We're not gonna know that. It sounded like you're trying to create a company in the 90s. Just add the letter E.
Ebullient.
Yeah.
We're now E Revere Asset Management.
Yes, we're online. So speaking of bullish or jubilant, it's interesting with the ATR charts, what's taking place. And I started to go over this. I went over this last night. You've got up to this 2 ATR level in the S&Ps, and that's been an area where you can pull back. And I noted that there's probably rotation coming. I don't know about the S&Ps pulling back per se all the way to the mean, back to, that'd be just a 3,500. That'd be a 100-point pullback. But I think the market can still power higher here, or tread water sideways or power higher. And it's based on this NASDAQ chart here. This NASDAQ starting to assert itself. And so if you start looking at the NASDAQ which is just at above now the 1 ATR, it's got some room to get up to this 2 ATR. And if you can look at using let's go to a 2-day, we'll go to a 2-day and then we'll do a 4-day. You can see the consolidations. It looks like if the market is going to power higher, and you can do, let's just do weekly here. If the market is going to continue to hold up, power higher, it's going to be on the backs of the big cap NASDAQ stocks, in my opinion. They haven't moved in relation. We're going to go over a bunch of things that are moving, but like here's Amazon. And Amazon holds the weekly. We're on a weekly chart now, the weekly 21. I think Amazon's move right now is trying to reclaim this. There's a big Elliott wave level at 3250-ish. I think that's where the trajectory for Amazon's going. right now. It'll be on the backs of stocks like Netflix and Apple, like holding that weekly 21. But if those stocks fail and the market, you know, and if you look at like what the small caps are doing today, there's Netflix off of the weekly 21. Let's take it down to a daily chart and take a look at what the small caps are doing here, stock nerds. There'll be a move lower. Like look at, this is not a big deal. Where like Tim, the small caps are only down 0.3%, no big deal. Right, you're holding in between the 2 and the 3 ATR. But if you go back through history and time, there's never been a point in time where you don't, I mean, if the market's weak, this is back in February, so fine. That's a special situation. But you get up into that 2 ATR, that's a bad way to look at that chart. You get up within that 2 ATR, and it looks like it just wants to pull back. As the 3 ATR raises the probabilities of a pullback. The 3 ATR raises the probabilities of a pullback. You're in that 2 ATR zone. The probabilities increase that you're going to pull back. You get up to this 3 ATR. That's the first day of the vaccine news. I believe that was November 9th. And you shoot up, but then you start making that move, that nice move higher. Now you're back at that 3rd ATR level. And I think probability-wise, you don't want to initiate small cap right here. That the move, the small caps don't have to sell off. They could just hold their own. But the move, I think, the next move higher is going to take place in large cap tech. Hunter or Don, either one of you can go first. Any thoughts on what I just proposed there? You don't have to agree with me. The best part about the show, stock nerds, is they don't know what I'm going to talk about beforehand. The worst thing you can do is be in an echo chamber, and you need different points of view. So I'll let someone go. Don, you want to go, or Hunter?
Yeah, tech is one of the groups that should do well if you assume we're going to a reflationary environment, and it would be at the expense of defensives like healthcare and staples. We were looking at charts this morning with Hunter, and XLV, the healthcare ETF, while the chart looks fine, the relative strength is horrific, making new lows well above of price.
Look at this, third ATR, Don, and pull back.
Yeah.
There you go.
And staples also bring up XLP.
There's the staples. Let me pull up on different charts. So stock nerds that are not used to these ATR charts as much as I am. They're used to seeing things with traditional moving averages. It's not a bad.
Yeah, and no, the chart looks great, but if you look at the relative strength, you've got an angle downwards pointing at like 4 o'clock, and that's not what you want. And contrast that with XLB, Basic Materials, which is a sector that acts well in this type of environment. You see that making new highs, and relative strength is right there with it also. Utilities are typically weak in this environment also, and that's confirmed by the relative strength.
I'll tell you what, I have yet to ever find the squeeze is worth the juice in buying the utilities. They're on my do not trade list, just because it's not, they're not defensive. When the market's going to sell off, the market's going to sell off. Like, let's look at the utilities back.
Yeah, they can be relatively strong like they were during the sell-off in COVID, but they still dropped from 43 to 70, from 71 to 43.
Yep, like they're no place to hide. Like that's why you touched on it in a video earlier this week, Don, about diversification. When the market's going to go to hell in a handbasket, it's not diversification that saves you, it's cash. Or if you catch it and you can be short, or if you're able to freeze your portfolio, it's not being in bonds, it's not being in XLU, it's having the I was about to say nimblicity, Don.
Nimblicity, that's clearly what it is. Yeah. Utilities dropped 39.5%, while the S&P went down 34%. So not even relatively. I mean, at the beginning they showed relative strength, and then they rolled over because forced selling is forced selling. You got to get rid of everything if you get a margin call.
That's what, yes, absolutely. Hunter, do you have any thoughts before I continue on here a little bit?
No, I mean, I agree
Sure.
with you for the most part in regards to those big cap, big tech names. I mean, you can look at pretty much, Amazon, Apple, Microsoft, Facebook. They haven't really done anything since those highs at the beginning of September. They've been consolidating around the mean for a while.
And yeah, and this is Amazon for the longest. Well, I mean, this is not a great looking. This is a choppy chart, daily chart. Just finally reclaimed the mean today, but we'll see if it can start making that move. They're not pretty charts. Netflix is even worse.
Yeah,
But
but
weekly they look great.
you would imagine at some point, if the markets, the broader markets, the QQQs and the SPYs and whatnot are going to continue higher, at some point they need to participate. But it just, aside from today they're up a little bit, or Amazon is at least, but they really haven't. It's been a lot of more of the smaller speculative names, the
Yep.
Pinterest or the Snapchats, and those names have been where the money's flowing and where the leaders are.
But that's what the market does, right? It's going to rotate and get you all excited for a bunch of names that might be newer to you, and then the markets don't really pull back or sell off. They just rotate into different names, and there's this great rotation coming into the market. And that I'm wondering if that, I don't know if it's going to be a great rotation. Don and I were talking. It might have just been yesterday. It's been a long week, even though it's Wednesday. There's going to be a rebalancing coming in the middle of this month. And I wondered, okay, have the small caps now run too much that they're going to rebalance out of them? Or was it a catch-up trade? And there's really nothing to rebalance in December. Like everything's now back to quote unquote even. And the market just holds the status quo.
Well, to your point, with Amazon and Microsoft and Apple kind of underperforming a lot of the other names over the last couple of months, are people now underweight, their allocations on some of those big tech names and are going to be adding to them, on a rebalancing?
It's a great point. And at the end of the day, the answer, and this is what frustrates Don, not with this particular conversation, but in general, and that's why I don't watch financial media as a habit, because at the end of the day, well, what are the charts telling you? Because they're going to shape the price action to whatever the news story is. But you could very well just shape the price action and then go, oh, look at what happened over there. So give me, Don,
and in keeping with what the charts tell you, you need to be looking at what is relative strength telling you too, because those examples we pulled up, the charts look fine, but it's far underperforming the S&P 500 when you get rotation out of those sectors. All the rotation takes place within the S&P 500. It just depends which sector the money wants to flow. And it doesn't take much when you exit tech to pop up these beaten down sectors like financials and oil stocks that have become a very small amount percentage wise of what they used to be.
It's both opportunity cost and risk, both.
Right.
You manage them both at the same time.
I just zoomed in on IWM, and this is really interesting to me. So, hey, Don, those names that were on that article this morning from the China crackdown, can you just, in your mind, conjure up a couple of those names real quick, please?
Neo.
Hold on a second. Just hold them on the inside. I want to set this up. So here's IWM, and so a number of small cap stocks this morning were kind of breaking to the downside pre-market, and my thought was, I'm like, oh, I wonder why. And then Don and I found it around the same time. There an article that talked about a China crackdown on some of these names. But look at what happened the last 2 days. Yeah, you're at the third ATR. You're now trading above the third ATR and IWM. It would make sense just probability-wise, and the market is probability, that you're going to get some kind of pullback. Now, it could be a sideways consolidation and no advancement, or maybe you do come back, in fact, to the mean. But look at this. I'm going to put this on a 5-minute chart. And here is Wednesday, so gap down, and then you find some buyers around 9 a.m., so half-hour pullback. Sell-off is a little too strong of a word there. And then now you find your grace. And so Don, give me some of those names that were in that article, which are small cap names for the most part.
NIO, NIO, which has been just absolutely on a tear.
Yeah,
and has recovered.
Yeah, it's almost flat for the day. And if you put it on a 5-minute chart, it matches. Look at that gap down. It matches what the small caps did this morning. They're getting bought right back up. Give me another
56 billion market cap on that, though. That's not a small cap.
Oh.
Some of these other ones might be, though. That one's been around for a while. XPEV, 47 billion market cap.
Apologize. There we go. This is the daily chart. Okay, so runs the rails. And by the way, someone might go, Tim, if you sell right here at the third ATR based on your probability, I don't know why I'm doing that voice, you're going to miss all this good move. Just trail a stop.
Exactly.
Just trail the stop. Look, if you know the probabilities increase every trade above that third ATR, it's almost like exponentially at that point. Certainly trail a stop. You remember what Space did? Real quick, I'll get back on this these other stocks down in a second. Space is having, SPC is having a day today. So, but remember, look at what Space did. It went on this monster tear, and then it gave it all back up and then some. And if you're not trailing up a stop, and cynical people will be like, well, who does that? Who rides it all the way down? I'm sorry, did you meet the traders from the year 2000? Did you meet the traders from the 2007, 2008 timeframe? People do this all the time. And so just trail up your stop. If you know the probabilities exist, enjoy the ride. And then when your stop gets hit it. And then CVNA is what we sold. CVNA didn't even get up to the third ATR. It just wasn't having a very good session on Tuesday. And it's like, you know what? It kind of reached up there. It was lunging for it. I don't know if it gets back up to this 246 high. Let me sell this, lock in my profit, and then just move on with it. The probabilities that exist now that you're going to try and come back somewhere towards the mean. You don't have to, but I can always, there's nothing wrong with CVNA. I can always get back into it. John, give me some more of those names from that report. Or the
LI is the third and final one.
There we go. Yeah, that's well, even LI's found some buyers here, even though it's still down 6%.
Yeah, they're well off their lows. NIO,
yep.
Very impressive there.
And so you might think, well, this is just, it's not going to get back up there again. You're right. And this is what gets, this is the, I can't see you guys when I'm not looking at the cameras, or I don't have the cameras looking at me. These daily charts are what crush, and it used to do it to me. The more disciplined I got about waiting for whatever my setup is. Like for me, I like buying around the 21 or consolidated forms around the 8, but my bread and butter, I feel, is the 21. It's not the 50, it's the 21. That's where I feel the most comfortable in my setup, and I'm looking for smaller time frame consolidations because I know I got a bigger one on the 21. Now I'm looking for those 15-minute or those 30-minute or 78-minute consolidations, and then I'm looking for triggers like a 5 on the smaller time frames, a 5 through the 8, an 8 through the 21, and so that gets me to pull the trigger on it. But if you don't know what your setup is, this could mark the gasp, and then it just rolls over. And I keep this chart set. Where is it at? This is the S&P 500 weekly. And there's just never, let me take it down smaller or so you can see more time. Here, you can see the years here. There's 2017, 2018. There's just nothing, and the purple line here is the weekly 21. There's nothing in the history of time that doesn't come back and check either a daily 21, the bigger moves to the weekly 21. And so when someone says, are you stretched? Well, the ATRs help me measure just how stretched are we from a weekly 21. And what we're doing right here is one of the bullish patterns I know of. It's a 3 weeks tight pattern that's forming. 3 weeks tight patterns are consolidative patterns. And when they form at or near all-time highs, in this consolidation form, they're continuations, what I meant to say, the continuation patterns. I think it breaks higher. But I know in the back of my mind that if this breaks higher and we reach that third ATR and we're on the S&P chart now, that it's not a place to keep adding. It's a place to go, okay, we're going to break or consolidate. I probably want to understand where we are risk-wise. And look, even here, here's April. You know, you get some fits and starts. You get above the 21, check back. Above the 21, check back. This is where I got defensive. We closed below the 21, and when you close below the 21, the door opens up tremendously to upside. But as soon as you get a close above the 21, you buy back in. And so,
you mean the downside? It opens the door to the downside.
oh yeah, yeah, that's what I meant. If I didn't say that or infer that, that's exactly what I meant. It opens the door to more downside. But this 3 weeks type pattern that's forming the S&Ps right now, I think if as long as the market holds together and the large cap tech starts to pick up, I think that pattern breaks higher. And then you check back to the 21 or somewhere. You're going to do it. But look how many weeks it took. You check back to we just checked back to the 21. Like look here in September. Come back to the weekly 21. Look how many weeks you get. Sorry, that's August. So now we just checked back to the 21 recently. We just said hello. So now you've got 4 weeks. I think that breaks higher, and I think that's going to confuse a lot of people. But what do I know? I don't know. That's the whole thing. You don't know. So that's why you study the charts. Don, any thoughts? I'm going to move on to precious metals here in a second. Do you have any
Moving
thoughts?
on.
Moving on. Gold.
I do want to say I really don't follow Chinese stocks because one, their accounting, they don't have to follow our accounting standards. Two, there have been plenty of fine acting stocks in the US. And three, they're communist bastards.
Well, right now our market is the strongest place to be, so there's no point in taking risk outside the United States and have currency risk.
If the SEC ever mandates that they follow American accounting standards, there's going to be a lot of selling in those China stocks.
They are screwed if they have to do that. And you know, it's the first time I've seen it happened a couple weeks ago with BABA, and now it happened just overnight with some of these EV stocks. It's actually China cracking down on their own things. That's right. Causing this. That's a new wrinkle to the whole game. And why, like you can't tell me you know the schedule of China crackdowns for political gain, right? Like I don't.
Well, here's the problem. Some of these companies are actually in pretty big trouble because they've been cooking the books, and there's companies going bankrupt, and now the Chinese government wants to have a scapegoat. They don't want to act like they weren't watching the store or they weren't paying attention because there's so much control. They're looking to crack down so that they can throw the blame on these quote companies, not on themselves. They're setting up a plausible defense right now. Is what's happening.
Plausible deniability. So
plausible, that's the word. Plausible deniability.
So here we go. Real quick, before we do gold, I do want to talk about gold, interest rates, the dollar. We got Hunter's got some research he wants to get out. And I got a watch list. Don's going to preview the 21 over 21. But real quickly, StockIdeas and market lovers, all the videos, if you ever want to back test us, they're all right here. There's Don's real good discussion on diversification right here. I did a video on the Carter sell-off after single-term presidents. Carter had an 11% sell-off. Of course, it's a different time from 80 to 81. And that led to a bigger decline, actually, even when Reagan took office. And then George Bush Sr. only had a 3% decline. But it'll be interesting to see. I think, Mark, again, that 3 weeks type pattern is a really powerful continuation pattern. And I think markets, if the big cap tech participates, I think markets do actually break to the upside and go reach those third ATRs. When they hit those third ATRs, we'll cover it right with you, stock nerds. And I'll tell you, I told you last night exactly what my plan is if they go do that. But if you want to scroll down to all the way down to, and you want to go to page 172 of videos and postings and anything we did, you could cover any market condition, see how we handled it. It's the easiest way to backtest us and see how we're doing. And if you want to get a hold of us, all you have to do right here is click the contact page. Hunter takes all the compliments for the show, so you send those all to Hunter. And then your complaint line is right here. You send all the complaints to Danny, and the easiest way to complain about the show, or just in general about life, like, is the turkey dry? Should you have served something different for Thanksgiving? 855s. Maybe you want conversation tips. Danny, what do you guys talk about at the Thanksgiving Day table? What's the conversation like in the Stewart household? What does it center around? Like, what's your go-to?
What do you want for Christmas? I'm trying to figure out.
You guys go right through dinner. Like, you don't compliment AK, like, what a wonderful
I'm sure I did. You always compliment the wife, Tim.
Do you follow it up with, you could have cooked a better turkey?
And the mother-in-law. My mother-in-law.
Right now, Sydney's learning how to drive, so it's obvious which of the two is going to be teaching her that.
I'm preoccupied right now, man.
How is Sydney doing driving?
She's, well, you know, she's doing good. I mean, it's,
you know what, Danny, I saw that you...
Here's the problem. What? So my oldest, Logan, he's extremely laid back, and he was a little bit cautious, and he was kind of timid. Lexi, my middle one, was overconfident, thought she had it all figured out, knew what she was doing. Sydney's the same way. Now, they think they've got it, but, you know, until you've hit a couple curves and you know, actually driven the car a little bit, you know, it takes experience. You can't just read it out of a book or explain it. So that's my fear. But Dallas is a tough place to drive in. That's not, you know,
trying to merge on like the George Bush is a speedway, man.
Oh my God, 75 is worse than George Bush. Try coming down 75 where I'm coming from. It's crazy.
Danny, I don't know if you know this, but AK snapped a picture of you after you took Sydney driving. Don, have you seen this? Don? That would be where you speak words out loud.
Are you gonna show? You thought you were gonna show a picture?
I was, but I asked him.
He doesn't have what he's like.
Oh, I thought it was a rhetorical question because you know I haven't seen it.
Oh, I didn't know if you saw it. I legitimately didn't know. Yeah. AK
Let's see
sent
it.
To me.
Come on, we're all the.
That was Halloween. That was Halloween.
That was after the AK sent that to me. That was right after you went driving.
Yeah. That's awesome.
I'm about 7'2" in that outfit.
And green.
Yep.
That's a great costume. Danny brought that.
That's Frankie.
Danny broke that out at the old building we used to be in. They had a Halloween parade or something at our old office building.
Oh, I forgot all about that. You're right.
Yeah, that's how I do. And then I guess you broke it out. Was that your father's?
Yeah, my dad actually made that costume. He bought the mask at Disneyland in California in 1964, and then he made the rest of the costume with shoulder pads and homemade stilts and ski boots. And yeah.
How do you get on the stilts?
Very carefully.
So you're walking on. So you're actually walking on.
Yeah, the walk. There's a video. I don't know if I put the video on there where I'm walking, and the walk is super authentic, like the original Frankenstein, because they're not painter stilts. These are wooden homemade stilts, and you're kind of. You know,
that's cool that the costume still lives on, man.
Yep.
So that's Danny after driving. Look, stock nerds, market lovers, if you like the strategies to which we espouse, any questions about what we're talking about, want help setting things up, all you do, and we answer the phones over the weekends, even this weekend, 855-732-5932. Just because it's a half day on Friday, Danny works 2 days on Friday. He's not even taking a half day. He's going to work twice the time on Friday to take all the stock nerds phone calls. So 855-732-5932 is how you get a hold of us. And then if you want to follow us on Twitter, look, Twitter is the easiest thing for me to chat with me. You can email me, but those questions tend to get long. At TJ Razor is how you follow me. Look, I got a message right here. So we're texting buddies when you follow me, and then I follow you back. There's old Danny, and then Don is at D Vandenborg is Don's handle. Danny is one Danny Stewart. If you want to follow, and they'll follow you back and chat along with you there. So let's do gold. This is what I was looking for, Danny. It's interesting. I want to have this discussion with you, Daniel. That when people say they're waiting for the pullback, and then you get the pullback to your spot, you never want to buy. Like, oh, I'm waiting for a pullback, or I'm going to wait till January 1st to get back into the markets. Market's really not on your time, but we were talking about a pullback to 1810. What are we trading at? 1814. This 200-day area down here, and now we've got it. But I got to be honest with you, I don't like. Part of me knows that the right thing to do, like that's the low risk place to enter a position. But when I go to the ATR charts, we talked about this maybe 2 weeks ago, Don, or the other week. These lines to the downside can absolutely curl over. So just like when a third ATR is a high probability for a pullback, a third ATR hit down here, which is, you can see it, it's down here at 1777. That's not your springboard for a move higher. It's just the downside ATRs do not work as well as the upsides do. And so, well, Tim, aren't you stretched to the downside? Doesn't that portend for a reversion to the mean trade? And I got to tell you what, 1814 up to 1870 doesn't really get me excited to want to buy gold here. And like and most of you don't trade in the futures of gold. So here's GLD, which did hit the third ATR yesterday. You can see it did rebound, but now it's kind of got that selling wick here lower. This would be what, 170? What are we at? 170 to 175. 5 points in that ugly of a chart isn't worth the risk. Like, well, isn't gold a safe haven? I think that's the point I want to address. Like, what safe haven is gold if it keeps going lower here, or is just going to stay a little bit depressed, Daniel? What store of value is gold if it wants to sell off?
If it's going down, it's bad. If it's going up, it's good. That's the same thing with any stock, gold, equities, bonds. Doesn't matter what the asset class is. I like things that are going up, but I get out of stuff that's going down.
You got to compound this with the fact that the dollar just made 2.5-year lows, which is normally the dollar and gold have an inverse correlation. Dollar down means gold up. When you're not getting that, it's double the reason to stay the hell away from gold. I think people are selling precious metals and buying crypto.
That very well could be, and that could be all.
Or buying stocks. Or buying stocks.
Or buying stocks. But
I'm sorry.
I think a lot of institutions are starting to make Bitcoin and some of the more popular cryptos just part of their operations, like PayPal, Overstock, Square.
Here's my thought.
MSTR is a tech stock that has decided that they're parking their excess cash in Bitcoin, and that's what MSTR did in response.
Yep. I read that in the journal like a month ago or 2 weeks ago. It was a huge article in the journal. Hunter, what's the bank that it's a normal bank that's doing crypto? We talked about it last week. What's the ticker?
SI is the ticker, and Silvergate is the name. They I don't know what they're doing today, but I think we talked about them right around 31, 32. They had a big move, got all the way up to almost 37 and kind of consolidated a bit, but
they got 40% above their 21-day yesterday. That's just insane.
Yeah.
Yeah. That's the whole trail up your stops, folks. DXY, let's talk about that. So this is my thoughts on the dollar and the markets. I think you're going to get a push lower here in the dollar. So what's the low over here? The low on 9/1 is 91.69. Okay, you're not that far away. My thought is that you push lower in the dollar, somewhere maybe around that third ATR, and what you'll see in response are the indices push higher. Now, let's talk about these dates here right quick, stock nerds. So here is 9/1, and where does this move end? On 9/25. So we'll just take the dollar and we'll put in here SPY. So if you look at 9/1 and 9/25, the dollar is such a powerful force for the markets. And so here is 9/1 on SPY. So you get a little higher right here, a little lurch higher. And then what happens from that point in the markets? All the way down. What is this date right here? 925. So when the dollar finally tops out on 925, what do the markets do? They start to gravitate back higher. The dollar is an extremely powerful force. Oh, wrong typing there. And so if the dollar is able to go a little bit lower here, I think that's that lurch. And then the tip off, by the way, if you see markets going higher and stocks going higher and like bonds going higher, it's usually equities that lose out at the end of the day. The dollar is the all powerful force. And so I think it all will happen like kind of in the same time frame. You'll see the extensions get hit on the Atr charts, the dollar's going lower, and you just have to be able to be disciplined and try to take some profits and trail up your stops. And if you gap down, eventually not every gap is to be bought. But any thoughts on that, Danny?
No, I agree with that. Not every, you got to have very strong gap rules. Period.
Don has some really strong gap rules.
Yeah,
Don, what are your gap
Don
rules?
actually did a video on,
Yep.
did video. If anybody wants to, just email me and I'll send you the gap rules video. It's a great video. It's just on gap.
Yeah, Don's gap rules video. Email Dan at Revere Asset or call him. He'll send it to you. Don, when a stock gap's down and it's something you're bullish in, what are your gap rules? And can you give me an example for that buying of the dip per se?
The key takeaway is that the low of the gap down day needs to hold, give plus or minus 1.5%, 2%. Sometimes, you know what, I don't off the top of my head. Well, I'll give you, how about an example of a failed one? FSLY had that big gap down on 10.15. So then you're looking for, okay, did we get all the scared people out, or is it going lower? And the question was answered the next day when it broke the low of that day, and then continued lower and since bounced. But it's a broken stock.
And it's interesting because there's so many people trapped now. I reckon that they bought this dip, and it's
that is such a good point about the trapped people too. Everybody that on the left side of the chart there that's higher are people that are looking to recoup as much as they can of their investment.
They will call this one at the end of the year, Don. It's going lower because everyone's selling it for tax loss harvesting purposes.
Absolutely.
And there's not that many stocks. Do you have one off the top of your head that's going to be? I believe Fastly is a tax loss harvesting candidate. Do you have another one? Like what's not worked?
Well, Exxon.
What's the ticker? 100?
I just said Exxon, XOM, people that were holding that into this year that haven't sold already. I mean, you've still got a loss there.
This is true. You got another one, Don?
Cruise lines are still down 60% or so from their highs in February. You might have people with losses there too.
Yeah, those stocks are so hard to play. Like talking, it was yesterday on the call. Look at Love.
No.
Love can't get above that spike high on the 9th. It needs time. These airline stocks need time.
Keep an eye on these things though, because this is part of the reflation trade where money is flowing into since that. And again, if you want to use the gap rules, Jets had that big gap up on the on 11.9.
I typed Let's, Don. By the way, Let's is not.
I don't know. Should we?
Let's grow. Let's grow. It's Jets, folks, not Let's. It's hilarious.
And that gap up was initially sold, came down to the ADMA, and buyers came in, and it's made a higher high now. So money is, this is, the play seems to be money rotating into the energies, the financials, and the reopening trade.
Wells Fargo.
Well, it's a reopening and the bailout prospects. They think a bailout's coming down the pipe.
When you say bailout, Danny, what are you referring to? Who's getting bailed
Congress.
out? Congress.
Well, I think they're going to sign another stimulus bill where they're going to help the distressed industries.
Ooh, look
which
at
would be
this.
the airlines.
This little pattern on Chewy. That's a bullish pattern. I look for that to break higher. Okay, Hunter, you got some research. And here's what we'll do. Hunter, I want to hear your research. Don's going to preview some moves, 21 over 21. I've got a couple watch list stocks I'll go over. And then we'll go over the river and through the woods to Danny's house we go.
There you go.
That sounds good to me.
All right, what you got, Hunter?
All right, so got a little bit of stuff about weed and solar. So first ticker I want to look at is IIPR, Innovative Industrial Properties. I've done a little bit of research on them. So bear with me here as I kind of synthesize what it is that they do. They are a weed REIT, for lack of a better term, but this is direct analysis from their website and some articles. They are a leading provider of real estate capital for medical use cannabis industry. Their portfolio is comprised of specialized industrial and greenhouse building, 100% leased to state licensed medical use cannabis growers. Curaleaf, Green Thumb, and Trulieve are examples of operators of their properties. They utilize a sale leaseback operation, which essentially means they buy the property so that the cannabis companies don't have to tie up all their capital in owning the real estate, and they lease it back over a long-term triple net lease to these companies. And so according to IIPR, it's a symbiotic relationship because it allows these cannabis companies to invest more money into their actual business and their operations without having to necessarily own all the real estate. So anyways, weed has gotten a little bit hot over the last day or two. Canopy Growth had a good day yesterday. I wanted to point this one out as one that had a big move up to about 164 and has been consolidating for about 2.5 weeks now. I think they also pay a nice dividend, if I'm not mistaken. Is that right, Tim?
3%.
And we checked it out, and it's about 3%. Yeah. So well, it's a
like
different company. You know, I can't say that I'm really familiar with another REIT that's doing something similar. So you know they're doing something new in a space where there's new and emerging markets. There's got a new administration who may be more friendly on marijuana, so on and so forth. So just one to keep an eye on here. They're about 5% ish above the 21 EMA. You know, if they get close, it might not be a bad place to pull the trigger if they keep consolidating here. Secondly, actually before I move on, pull up MSOS. And this is one that I know Don has talked about before, and one we actually added a small position to recently. This ETF has a little bit. I know I just mentioned Curaleaf, Green Thumb, Trulieve as being some of the clients of IIPR. Those are three of the primary holdings of this ETF, and a lot of those ticker symbols, those companies, look better than the commonly known weed stocks like Tilray and Afria and some of those. But even if you can pull up CGC, Tim, Canopy Growth, they had a big move up to about 26.95, and then consolidated, got back, actually pushed above it yesterday, kind of still flirting around that previous high. But you know, the MSOS ETF is something that gives you a little bit different exposure than your standard, your Canopy Growth and your Tilray. It's got Trulieve and Green Thumb and some different companies in there, and you can pull up TCNNF. That's Trulieve. They're actually the Florida TC. My bad. And I want to say they're having a good day today as well after they had a good day yesterday.
Couple of
and their
these
charts look better.
Curaleaf, the one I like is OTC. It trades on the OTC markets.
They all do. It's
Yeah.
there's a federal law against them being listed on
I didn't
major
realize
exchanges.
that. Okay.
All of them that end in an F are U.S. companies, but are traded on OTC.
Yeah,
Ones like CDG, and this is why MSOS is outperforming the MJ ETF. That holds a lot of the foreign companies, which have it's really suffered.
Yeah,
well off its highs.
Yeah.
Yeah. And that, I mean, it looks similar to kind of what Canopy's growth has done. It's floundered for a long time and then finally got a little bit of a break. But MSOS has been, you know, relatively strong compared to that one.
That'll be
And it's
interesting.
because of those holdings.
In similar fashion, I think if a Biden administration reduces the legalities for the IIPR works, right? In my opinion, Hunter, because of all the nonsense that goes around the access to the funding for these companies. You know, like if a Wells Fargo or Bank of America were just, if the laws were reduced or changed so that they could offer this funding and be banking to this industry, I think you buy the banks on that.
Well, it is. I know we talked about it prior to this. Yeah. In regards to how it affects IIPR, it'd be something worth monitoring because, you know, maybe right now, because essentially what they do, they're a creative capital provider for these medical cannabis companies. And so if there's now more competition or more people, more options out there that can provide capital to these companies, does that negatively affect them? How will the market perceive that? I don't know, obviously, how that'll go, but I do think if you get some level of decriminalization or reduction, you know, in the legalities surrounding marijuana, then I think it's worth monitoring how the market perceives the effect on IIPR.
I'll tell you what.
Basically, they're a leasing company so that these cannabis growers can have a cleaner balance sheet and not have such big long-term liabilities. That's the bottom line.
Yep.
And they've done this with big shipping companies and other industries in the past. Now this is a niche doing it for this industry.
Like, look at what was taking place with online gambling. I don't know if you guys follow. I reckon you do, Hunter, and maybe Don. The receipts, the tax intake in the states that have access to DraftKings or Penn, it's astounding. I believe New Jersey is now, it's overtaken Vegas. In one of the first, Jersey was one of the first states to, someone to follow in this space is Darren Rovell, who covers it pretty extensively. I know there's more, but he'll tweet out the receipts of these states. Pennsylvania is taking in a blank ton of money in tax revenue right now from the gambling and the haul. I mean, look at the weekly charts of these stocks.
Is that showing that Penn is down 0.93% today?
Right now.
That's really interesting considering DraftKings is having about a 5.5% day. Penn had been acting a little stronger over the last few days, so it's interesting to see that that's kind of flipped today for whatever reason.
But if I mean, what a revenue stream for the banks. The correlation that I'm drawing here is if access to, what are they doing in Colorado now? Mushrooms too? If access to these alternative medicines really, I mean, these companies are unbanked for the most part. If you can become banked, I wonder if the revenue stream is significant as legalization spreads to more. I don't think you're going to stop. I mean, that's my opinion. You don't have to agree with it. I don't think legalization is going to stop. I think legalization is just picking up. And I think it's like online gambling. These revenue streams that these states are taking in, why wouldn't you want access to those funds? Tennessee is one of the latest. Tennessee now has DraftKings. Barstool's going to expand with Penn. This is Penn National Gaming. They're expanding to Illinois. And I don't think you're going to stop it. The revenue's too great. And think about all the revenue that's not, cigarette sales are down, right, Don? Somehow I don't know why you would know that. No idea. Well, Don hates the cancer causing stocks. Give me what's the ticker symbol for?
You got PM.
Thank
Philip
you.
Morris.
Literally could not think of Philip Morris. What's that weekly chart look like? Yeah, 123 to 78, but they pay a
but
good
the yield. But the yield. Don't forget the yield.
Yep.
Idiots.
Lose 20% to get 5.
But like, this is my prediction. Like, I had this talk with Danny, and when I was in grad school, we had to write a paper on this, or I wrote a paper on this, that the states are losing so much are going to lose so much tax revenue. They've already lost it from cigarette sales. But the pandemic has accelerated the loss of tax revenue from gasoline sales and tolls.
And real estate, sales tax.
Yeah. But more, I mean, it's no, you notice it right away right now with gas, and they're not collecting the revenues. And so where can a state go to get these revenues back? What are the things people want to do? Well, they want to gamble and they want to endeavor into alternative medicines.
And those people that are working from home, they're talking about a privileged work at home tax for those people working at home.
What you're going to see eventually when the electrification comes of the automobile to the majority of our roads, you're going to see some kind of tax that they won't call it the gasoline tax, but there will be a road tax added to your electric bill. I've thought that for years. They're going to get you somehow. And I think they get you somehow right now to make up for the lost tax revenue from driving and from, I mean, Jesus, Danny, even insurance is suffering here, where Allstate has a plan. There's a commercial running for Allstate, right? No, is it Allstate or Progressive? It doesn't matter. Where they're charging you by the mile. Like you can pay your insurance by how much you actually drive. No longer is it, hey, how many miles do you drive on average? No. We'll insure you by the trip. There's so much tectonic shifting going on here. I'm sorry, Hunter, I just interrupted your whole segment.
No, those are good points. Now, there is two things I'd like to point out, just kind of that I've thought about as we're going through here. Work, Slack. I know we've talked about this. Yeah, it did open back up. It may have been halted again. I don't know. But it was been up in 25 to 30%. I think it's closer to 23 now. But I know Don mentioned this potential talks for an acquisition by Salesforce. Salesforce was down about 4% on the news. But just kind of a headliner, an update. But I do want to make a point on DraftKings and Penn. So I know you mentioned that Penn and Barstool Sports, they're going to expand into different states, so on and so forth. Those are, in my mind, those aren't two directly competitive companies. In a way they are, but I think there's room for both of them to exist and exist at a high level. DraftKings operates a sports gambling on fantasy lineups. So it's two completely different gambling methods. Whereas on the Barstool Sportsbook, you might do a parlay. On DraftKings, you're doing something completely different. So in my mind, DraftKings is competing with the FanDuels and those kinds of companies, whereas Penn is, a little bit different. So anyway, just to comment on those. I don't think that one has to be the winner.
I didn't realize that. You can't bet the overs on DraftKings.
No, I do think maybe DraftKings has a sports book. I don't, but as far as I know, you're doing fantasy lineups, whether it's for golf, the NFL, college football, hockey.
Didn't know that.
You can do e-gaming. Basically, you can create a fantasy lineup for anything you can imagine within DraftKings, but it's a different business model than what Penn is trying to do. Penn also has the physical casinos. That's not DraftKings' mission or what they're trying to do. Okay. So anyways, just to comment on those two.
I appreciate that. I didn't know that.
And as far as I know, the company that owns FanDuel is not publicly traded. And in my opinion, DraftKings is far better than FanDuel. I've used both. But
does FanDuel go under? It just get absorbed into the oblivion? I don't see anything I used to see commercials for FanDuel.
There's a SPAC thing that was thinking about taking them public.
Oh, okay.
Yeah, I think DraftKings has been kicking FanDuel's ass in regards to advertising. I know DraftKings spends a lot on advertising, but I mean, if you watch Red Zone, you see DraftKings 400,000 times, on a Sunday, advertising a lineup, or here's a special offer to go do, this certain contest tonight for the Sunday night football game, whatever it may be.
Do you have the NFL? I've got the NFL Sunday ticket streaming.
So you watch Red Zone?
Red Zone is like crack, man. It's addictive.
It's a great thing.
All you're doing is seeing the action. You're not. Although I'm the glutton that will watch all the Cleveland Browns Philadelphia Eagles game because there's a chance we might pull it out, but we don't pull it out.
Yeah,
I
no, I'm
know
a
it's already in.
big Red Zone fan. And you got to think that's people that are probably watching Red Zone all day on Sunday are probably a pretty decent crowd to market to for making fantasy lineups for online sports betting. So
Zero. Part of the package I have is they actually have a fantasy channel. So you get all the games, you get the red zone, and then there's a fantasy channel that's just discussing fantasy during all the games while showing you the games. It's craziness.
I do
DraftKings
have,
does have a sports book.
they
Oh, they
do.
do?
That's what I thought.
I think it's bigger in Europe than it is in here.
Gotcha.
So I do have a couple more things to pull out. You can pull up TAN, Tim,
Sure.
the solar ETF, and just kind of look at the maybe the last couple of weeks really. So you can see they kind of pulled back and hugged the mean there, the 21 for a little bit, and then over the last 4 days they've had a really strong move. They've gone from about, or TAN at least has gone from around 75-ish to about 83, 84 today. So I wanted to give you guys two maybe lesser known names in the energy solar space that really were driving this move. The first one is Nova, Nova is the ticker. So they, going back to last Friday, they had a really strong move off of the 21, bounced off of about 31.80 up to 35.24, and they continued that move over the last 3 days up to 42 today. And this is one I've monitored, in that group. And for whatever reason, Nova is acting like a leader in the space, and just showed some really nice strength off of the 21, consolidated after a nice run up or bounce off of the 50, and then moved right off the 21 up $10 over the last 4 trading days. The next one is SunPower. Ticker symbol is SPWR. And they have just continued to show strength, even when some of the other solar names have sold off. Didn't get all the way back to their 21 on around the end of last week, but have moved up from a low of 1960 on Thursday to 2350 today. So, roughly a 20-25% move over the last 4 or 5 days. And I actually didn't have this one initially. Let me pull this up before I mention it. Enphase is another one, ENPH, that has been a leader that, hasn't shown some of the weakness that some of the other ones that had such a crazy move up initially have. This one, bounces off the 21 beautifully on November 10th at around $108, $109, and has continued up to 140 pretty much, just moving straight on up very nicely. So anyways, those are the 3 leaders from my research anyway that have showed the most strength, looked the most healthy, haven't broken significant levels of support, and actually led the move up, the rebound on TAN after it kind of consolidated a little bit. So anyways, that's what I've got. I wanted to cover solar and weed, be a little bit secular today. But anyways, that's everything I've got for today.
Don, what you got?
Let's talk about a stock that is coming out of the 2121 list, Novacure.
Oh, what's going on with Novacure today?
NECR.
We sold it this morning, first thing, when it did the time big down day yesterday. No news. Several medical stocks down yesterday, and we talked earlier about how the XLV, the medical sector, is lagging. And I don't know if this is related to that or not, but it opened up today and ran right into the downtrending 21-day exponential moving average. And when it failed there, we exited from it.
Okay. What else?
So a gain. It first started this about 3 months ago. So a gain on those shares. We added to it last week, a loss on those shares. And I'll update the rest on Friday's video after the market closes.
I've got one.
All right.
Oh, go ahead, Don. I mean, go ahead, Hunter.
This point, pull up Twist, TWST. Also, it's a bioscience company, but they got hit really hard yesterday and are looking bad again today as well. Just pulled back from like 120 to 100 in 2 days. So just another one in that kind of healthcare, similar space to what Novacure does anyway.
I got a whole list of things I'm going to cover in the Wednesday night video, which is tonight. I'll give you two. I'll give you a little taste of it. ETSY. I like Etsy here a ton. This from the 21 here, it's kind of consolidated around that first ATR. Looking for Etsy to make its ascension back probably to that third ATR. There's a couple of larger squeeze consolidations. Better way to frame it. Look at the 4-day here. That is what they call a beautiful chart. So got some things to highlight on the video tonight, talking things like Etsy and looking for a run. I'll do one more here. We'll do CHWY. Like the Chuster here, that is, God, that's a beautiful chart. And earnings coming up on 12/8 after the market's closed. Danny, take us home.
And in full disclosure, we own Chewy. Folks,
we own
listen.
Etsy. We own Etsy too.
Oh, yeah, okay. Folks, if you like what you heard, please tell a friend, tell a neighbor. Just send them to opinionasset.com, and we won't promise you we won't spam them, we won't hassle them. All they got to do is hit subscribe, and they'll get this podcast.
Hold on, Danny. Hold on. I feel like people tune out during the credits. Hunter, while Danny's reading the rest of the credits, you give us one more stock. We're going to keep them hooked up, okay? Danny, now go. Finish up.
Tell a friend, tell a neighbor, just tell them to subscribe. And this podcast, as well as the daily market insight, will be right in their inbox as soon as it's completed. And the webinars, you can sign up for Don's normally month and a half. He does them as time permits. His Lunch and Learn, they're an hour long on Wednesday Eastern time. And you can always call us old school at 855 Real Wealth. Happy Thanksgiving, everybody, and be safe.
All right, Hunter. Now is your time to shine. That one stock, they stayed. It's like a Marvel movie, man. They stayed through the last of credits to see what's coming up in the next movie. Give me one, buddy.
All right, NNOX, Nano X Imaging. So I know Don's talked about it briefly. It's one I've done some work on. Revolutionary company as in regards to their mission, and their mission is to provide affordable and timely medical imaging services to the world. And there's, according to them, there's a lot of the world that doesn't have that service. So they developed their own technology. It's cloud-based. Images are immediately uploaded to the cloud.
It's portable.
And it's portable. So just take a look at them. There's something that they're doing something new, and they're doing something revolutionary, and it's innovative in a space where, medical imaging equipment is very expensive and cumbersome. So take a look at them. They had a big move up on increased volume. Don talked about it in his video. There's some important conferences coming up, but it's a company with the N, and that's what we're looking for. We'll see if they can actually.
We do own a starter position in this.
That's true.
Danny.
We'll talk to you next week on your money.